Hey everyone, this is Corey with Sims Investment Management, and this is another monthly market update. And I've got my proud Bearcat gear on today because I was at a UC event earlier, and some big news about the Bearcats potentially going to the Big 12. So fitting that I have the attire on today. It's also fitting because exciting news for Sims Investment Management. We've got two other Bearcats joining us now. Joe Higgins, who is a recent UC graduate, came on board September 1st, and he'll be helping me, understudying me, training to become another investment advisor representative. And then Ryan Atkins, who is a Bearcat graduate as well, and an author, and just two really great guys that are going to be joining the firm. And I'm excited about the improvements that they're going to be able to help us make and the continued client service model that we want to get better and better serving you. So welcome Joe and Ryan. Moving on to the market a little bit. The market, at least the last few weeks, and in July or in August, it was up again a little bit. We keep kind of muddling through a little bit right now, which is great. It's healthy for the market to digest advances by time rather than price. So what I mean by that is we would rather, after the big rally that we've had off the COVID low, we would rather sit here and kind of muddle through and move sideways for a little bit rather than giving back a lot of what we've made so far and then have more volatility. So let's hope that we keep kind of this healthy muddling through as the market figures out what it wants to do next. It's got a couple questions that we need to figure out, like what type of scaling back is the Fed going to do with their bond purchases? Is the Delta variant going to continue to stay under control, or are we going to continue this COVID recovery? So a lot of unknowns out there, but I keep reminding investors that if you look at what we've gained in the market since the election last year, we're up about 40%, which is absolutely tremendous. So even if we gave back half of that, even if we had a 20% decline over the next few weeks or next few months, we would still be up north of 20% a year since the last election, and we would still be positive for 2021. Just a reminder, average correction in any given year is about 14% peak to trough. So that would be completely normal market volatility. It's important to also recognize how good company earnings have been. They've been up basically 92% off of the second quarter of last year. So that's why we see the market responding and rallying the way that it has. It will be interesting to see what happens in general. We have over 10 million job openings in this country, which is amazing. We have the unemployment benefits that are expiring, so we'll see if some of those jobs start to get filled. And I saw a recent kind of poem, if you will, that said, we've never had a drought that didn't end. We didn't have a storm that didn't clear. We've never had lightning that didn't retreat, an earthquake that didn't still, a flood that didn't recede, or a virus that wasn't eventually completely overwhelmed by the healthy. So I do believe that eventually we will move past this, hopefully, and look back on it and realize that we're a stronger, healthier community because we lived through it. Other than that, I would just encourage you, we continue to put out some Teaching Tuesday videos, blogs, video blogs, and we have a podcast called Common Sense is Free. That's on Apple and Spotify. So tune in. We're about 6 episodes in with some really great guests that have been on there, and some random topics, not just finance related. So if you have any questions, please don't hesitate to reach out. If you think someone would benefit from seeing this video or talking to us, please share, and we'll talk to you next month. Thanks.